So in this video, we will look at a couple of dark cloud covers, and this is a daily time frame chart of Apple company. What is a dark cloud cover? Have a look at this. That's a dark cloud cover. It comes after a uptrend. It's a two candle pattern. The second candle is red. The first candle is green. The second candle opening price should be above the high price of the prior green candle, and the second candle closing price should be below the midpoint of the real body of the prior green candle, and the high of the pattern, the high of these two candles, or the highest high of these two candles becomes resistance, and it is a pattern on which you can initiate a trade. It's a bearish reversal pattern. So those are the conditions of a dark cloud cover, and this is called as a perfect dark cloud cover because the opening price is above the high of the prior green candle. One more condition is that both the candles should ideally be tall. There is no specific definition of tall or long given, but when you look at the candles compared to the other candles on the chart, you will come to know whether it's a tall or a long candle. So that's a dark cloud cover. I have drawn this blue line which is resistance. As you can see here, you have another dark cloud cover here, but there is a big difference between this dark cloud cover and this one. In this dark cloud cover, the opening price of the second candle is above the high price of the prior green candle. That is not the case here. So that is why this dark cloud cover is called as a variation of the dark cloud cover. So if you have a variation of a pattern, then the probability of a reversal goes down. Okay, the more perfect the pattern, the better it is. Another point to notice here is that the closing price of the second candle is just at or slightly below the midpoint of the prior green candle. Okay, so again, that is a problem. We need a decisive close below the prior candle midpoint. Okay, in this case, you have a decisive close. You don't have to think twice before coming to the conclusion that the second candle has closed below that midpoint. But here you will have to measure, you will have to zoom in, and you will have to check where exactly the closing price falls relative to the midpoint of the real body. And remember, it's midpoint of the real body, not the midpoint of the entire candle from the high to the low. However, although this is a variation and although the probability of a reversal for this dark cloud cover is low, I still would give importance to this dark cloud cover because number one, it is confirming the resistance created by the prior dark cloud cover. Second, there is this red candle which opens above the resistance but closes back below the resistance. So that single candle itself is a reason to go short. Okay, so those are the two reasons why I would give importance to this dark cloud cover, even though it is not a perfect dark cloud cover and a variation of a dark cloud cover. Again, reversal doesn't mean that the price will go down. Reversal means that the price might either go sideways or down. The probability of either of these two events happening is very high. The probability the price will go up from here is very low. That's what I mean by reversal. So as we know, the dark cloud cover high becomes resistance. So there is an entry point for you here if you want to take the trade, and the high of this candle, that becomes your stop loss, and that becomes that support level, that becomes your target. So you have a nice, this is your reward, this is your risk. So I think you have a 3:1 trade or maybe 4:1 trade, which is a fantastic reward to risk ratio on this short position. The only problem with this trade, the only obstacle for this trade is this. You look at these two candles, between these two candles there is something called as a gap or a rising window. A rising window can become support. Okay, so that's the problem. That is one reason I would not take this trade. But imagine if this shadow was like this, so that there is no gap. Okay, in that case, there is a clear trade here. One dark cloud cover confirming the resistance of a prior dark cloud cover. That is very powerful. And this candle itself, anything that opens above resistance and closes intraday when it closes below that resistance, well, that single candle itself is very powerful, because it indicates that the bears are not allowing the price to cross above that resistance line. Every candle in Japanese candlesticks is considered as a battle. It's a battle between the bulls and the bears. Okay, so that's the dark cloud cover for you. If you want to learn more about the dark cloud cover, go to this link. Have a look at my Japanese candlesticks trading mastery program. There are multiple levels in this. There are more than 1000 chart examples. People from more than 170 countries are already enrolled in this program, and they are doing the program. It's a completely on demand video program. It has multiple levels. As of now, it has around 15 levels of training. Each level would be minimum 5 hours of training program. First few levels are much bigger than this. So there is a lot of discussion. I have discussed the dark cloud cover in detail in level 1. Okay, there are 20 chart examples I have given simply on the dark cloud cover. So please go to that link and have a look at the program. It will help you understand the dark cloud cover better. Let's look at what happens next. As expected, that window did not hold and the price just went down. Your target was achieved within a few days. I think you had to wait a couple of weeks, since this is a daily chart. You had to wait for a couple of weeks for this candle to emerge that would hit your target. But the reward to risk ratio offered by such reversal patterns is very high. Remember, reward to risk ratio is very important. Do not trade anything which is below 2:1 reward to risk ratio. And there is this magic reward to risk ratio which is 2.5:1. If you are trading with this kind of reward to risk ratio, then even if you get only 3 out of 10 trades right, you are still in the money. You can do the mathematics and you can check for yourself. Okay, I consider 2.5 as the magic number. But anyways, that's the dark cloud cover for you. In this video, we have discussed the two dark cloud covers and how they occur at a certain price point. And at that price point, we can clearly see that the bears are taking control whenever the price reaches that. And when you get that kind of an information, it becomes easier to trade. And notice I have not used any Western indicator here. Without even using any Western indicator, we are able to draw so many conclusions just by looking at the price action and having a sophisticated knowledge of Japanese candlesticks. That's what I aim to teach you, and that's why I want you to go to this link and look at that Japanese candlesticks trading mastery program that I have created. Spend around 1 to 2 years doing that program. It's a detailed program. You cannot acquire the skill of trading overnight. It takes time. It takes years to master a particular craft. And I think 1 or 2 years is sufficient time to get a good handle on how to read charts the way I am reading them.